depends on the various jurisdictions and markets. I mean, clearly, I mean, there are situations in core markets like the UK, France, Germany, where you have a financing surplus rather than financing gap. Having said that, obviously in peripheral markets such as Spain, Italy, you still have, some significant financing gap. I think DTZ, according to DTZ, the financing gap stands at roughly 42 billion US dollars right now in Europe, and of which Spain makes probably a third. And I would say again, I mean, the market has segmented pretty significantly. So on core products, I mean, you wouldn't have any issue, finding the proper financing you would look for. When it comes to secondary kind of markets or development deals, then there would probably be some sort of lack of liquidity across the board, I would say.
I think that's an interesting point. It depends on the sector you're in, but I'm always tempted to look back at the Mark Twain saying, which is, reports of my death are much exaggerated, because I do see pockets, and substantial pockets at that, which are still very short of capital, debt capital, in the UK market. So if you look at the core product, the big shiny buildings, the trophy assets, there is a very large volume of capital out there looking for homes. But I think if you move away from that, exactly as you were saying, the availability of capital does dwindle quite rapidly as you move into quite tightly defined sectors. So construction, development, the less favoured regional investment product, definitely there's still shortages. If you break it down by size, I think there's also quite notable gaps in the market. So as you move out of that substantially 50 plus area, then the availability of capital really does dwindle quite fast. And I was talking to one of our borrower targets only yesterday, where they were saying, actually, they've got 100% pre-sold on their residential scheme, but actually, when the banks looked at it, they said, we won't lend against it. And that was really quite a shock, because I'd have said that was actually pretty decent. You have contracted sales, and nobody's willing to lend on it. So,
do you think actually, everybody talks about it being a debt gap, actually in a lot of situations, particularly where you've got people that have historic loans that they want to refinance. The reality is perhaps the gap is as much at the equity side rather than at the debt side. There is a lot more debt out there. Yes, 12 months ago, I think if we were all sat around here, we were saying there is still quite a significant debt gap. But there has been much more money flowing in. The old traditional banks are back out there lending again. But actually, where the gap is that you can't, unless you can borrow 75 plus, it is actually the equity bit that a lot of people are missing. And reality is that either they've got to bring in partners at the equity level to be able to refinance. So I think you can get, you can always sort of blame it on the debt side, it being insufficient debt, but it's whether people trying to seek to refinance are prepared to allow new equity in, which will actually allow them to recapitalise the positions. So they don't want to lose control, and that's their big issue. Is you bring in equity, you start having to pass control to the equity.